Let's get right to our market roundtable. Futures pointing to a positive open this morning after the worst day of the year on Wall Street. Joining us now is Mandy Xu, Chief Equity Derivative Strategist at Credit Suisse, John Roque, Senior Managing Director at Wolfe Research, and Mike Santoli rejoins us. He is, of course, CNBC's Senior Markets Commentator. Good morning to you both. Mandy, I will start off with you in terms of positioning. What are we seeing?
We're seeing a lot of volatility in the markets, that's for sure. Within the FX markets, what's interesting is that the expected volatility going forward in the yuan reached almost a record high yesterday, right? So that what tells you is that investors expecting this turmoil to persist. It's not a one-time devaluation. And the last time we saw this big of a move in the volatility of the yuan, August 2015, what happened in the weeks after? S&P down 10%, NASDAQ down 12%. So
do you think that scenario changes? Do you think that yuan volatility changes given what we saw from China overnight in terms of setting the fixing price a little bit firmer than expected, and also this headline from the PBOC this morning that the yuan will not fall further? So therefore, if the volatility comes down, then those outcomes for the S&P 500, do they come off the table?
We'll see. It's only been one day, right? And of course, they're going to have to come out and say this to prevent a massive capital flight. But we'll see going forward. But certainly the positioning in the options market, both FX and equity, is for volatility to persist. So all for the past 2-3 weeks, we've seen is massive buyers of VIX upside calls, people playing for the situation where equity volatility picks up.
Are we still in an upward trend, John, or have we broken trend?
No, we're still in an upward trend, but this is a corrective phase in an uptrend that's not yet over. That's the way we think about it.
Which charts look strongest to you within sectors? I mean, we saw tech getting crushed yesterday, financials crushed as well.
So in this environment, we would think relative safety would be amongst utilities, consumer staples, although they're very expensive. But the preferred asset we have globally, which we've talked about for 2+ months, is gold. Gold and gold stocks, we think, must be bought and should be bought on any pullback.
And when you talk gold, do you ever consider putting Bitcoin into some of that trade? Because it's actually acted like gold over the last 6 weeks.
We pay attention to Bitcoin fairly closely, but I don't have enough historical data or prior instances of it doing what it's doing now to have a better feel for it. So we're sticking with the original Bitcoin, which is gold.
Mandy, China's in a tough spot here. They're caught on the one hand, on the one hand with tariffs, on the other hand with making major reforms, including how they deal with U.S. companies. I don't see how China wins, if you will, in quotes. How do you think they view their position right now?
I mean, I don't think anyone wins in a trade war, but certainly I think the reason why we're seeing a bigger reaction in markets this time around to this latest round of tariffs is because of China's reaction, right? By letting the yuan weaken above 7, which has historically been a no-fly zone, kind of tells you China doesn't see a near-term resolution as possible or probable, right? And that's what's really freaking out risk markets right now.
And devaluing doesn't help China.
I mean, it helps them a little bit, right? But
in the short term.
In the short term, certainly. But as I said, I don't think they're real winners in this trade war. But the fact that they are kind of willing to go there and include FX as a tool, that's a new development, and that's kind of what markets are reacting to.
What about the Hong Kong situation, which nobody was even watching until the last few weeks? I mean, now the tear gas stuff, it gets heavy coverage. Is the yuan an issue there? Most people trade USD in that place.
Yeah, so that's the Hong Kong dollar. I think that's different, but certainly as a political situation, that's something China is focused on very, very much, right? But in terms of broader implication for global markets, I don't think that's as important as what's going on the trade front.
Mike, how do you interpret this open, especially considering overnight yesterday we were at the lows down more than 600 points on the Dow? I mean, you almost would rather see us be down at the open or have some persistent weakness in order for this.
I think that's a little bit the standard tactical playbook that maybe you'd like to see some fuller flush if you need that, but I'm not sure that always applies, at least for a bounce, right? I mean, you don't necessarily. I think the good news about yesterday was it didn't start yesterday. Right. Last week, you were down a couple percent. You see a lot of stalling out of the market indicators. It was a lot more stocks underperforming in the weeks leading up to it. So it was kind of telling you you're losing some energy. We're down 6%, peak to yesterday's close in the S&P 500. It's roughly what you got in May. So it makes sense to bounce. I do think a lot of that standard playbook, though, Melissa, also says the low in the S&P futures yesterday is going to be like the heart beating under the floorboards for a while, right? If you don't go back there, it's going to feel like it's haunting you. And you're big deal. I mean, it's only a couple percent lower, but it's one of those things that is going to stick in people's minds, at least to make people cautious about chasing it up to the highs.